A battle is raging in global oil markets. Saudi Arabia has unilaterally increased its oil production levels in retaliation for Russia refusing to agree with OPEC requests for production cuts. This has caused the biggest single-day drop in global oil prices since the Gulf War in 1991. How did we get here? Coronavirus, in addition to creating a massive international health crisis, is also impacting global markets and economies. One consequence of the virus is that global demand for oil has dropped, causing a huge oil surplus, thus forcing prices down. China, the world's biggest oil importer, is now consuming much less energy because of the disruption to its manufacturing industry. Refineries there cut their oil imports by 20% last month, and it's estimated that in the first quarter of this year, global oil usage is 3.9 million barrels per day lower than last year. In order to maintain balance in the market and protect their economies, the Organization of Petroleum Exporting Countries, Opec, decided to cut oil production by about 1.5 million barrels per day. 1 million was meant to be cut by OPEC member countries and 500,000 from Russia and non-OPEC countries. This was going to be the biggest slash in production since the 2008 financial crisis. But Russia did not agree to the cut. Even though Russia is not an OPEC country, 3 years ago it made a deal with the organization's members that they would coordinate production levels. Amid coronavirus fears, Russia wanted to see the full impact of the virus on oil demand before taking any drastic action. But is this just about Saudis and Russia? In 2014, the US became a big player on the oil scene after it began shale extraction and captured a big piece of the global oil market. In 2018, they eventually became the world's largest oil producer, surpassing Saudi Arabia and Russia. Currently, US oil production is at an all-time high, producing 13.1 billion barrels per day. This year, US exports reached a record 4.15 million barrels a day. This has changed a decades-long dynamic in the oil market, with the US now being a net exporter of oil, not simply an importer. The US Department of Energy has said that it's determined to stay as the #1 in global energy producer. But there's just one obstacle to continued US oil dominance. According to Mehmet Öğütçü, an energy expert, extracting shale oil at any level below a $50 market price is not sustainable for US companies. So a cheap global price favors Saudi Arabia and Russia. So why didn't Russia agree to the OPEC cut?
From the very beginning, Rosneft chairman Igor Sechin, who is close confidant of President Putin, was against a cooperation with OPEC in terms of cutting production, because he believed that Russia will be losing market share to Saudi Arabia and increasingly to the United States.
In other words, a decrease in production would increase the global price slightly, which favors the United States. One thing is clear though, Saudi Arabia didn't like Russia's move and retaliated by slashing its export prices. The Saudis have also decided to boost their oil supplies to a record level next month. So what's next? The start of an oil price war at a time when demand is falling due to the coronavirus fears triggered a shock to the market. Major oil classifications like Brent crude and WTI have dropped by around 50% in value since the year began. And as long as the virus fears prevail, there is no hope for an oil price recovery in the near future. In fact, 2020 marks the first year since the 2008 financial crisis where global oil demand is expected to drop. Goldman Sachs slashed its oil price targets for the year's second quarter to $30 per barrel for Brent crude and to $29 for the WTI. Maybe Saudi Arabia had hoped that the dramatic price fall would force Russia back to the negotiating table, but that seems unlikely, at least for now.